The market tries to bounce but can't break through. Is it back down we go? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that the market was extended to the downside and we likely needed to see a B-wave bounce before continuing the downtrend. It does look like we're getting that bounce as the market rallied up into key resistance before falling down a little bit into the close. Now the question is, will the bulls follow through? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave theory to break down the S&P 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, we were back in the saddle yesterday after a few days off last week. We had 2 day trades, 2 winners. And as you can see on our screen, our algorithm is absolutely killing it for day trades. We're up 23% for the month. We just started this algorithm last month, and it is just kicking butt. We also have built a trading community, and that's what's more important than even making the money. These people care about each other. We all want each other to win. We all support each other. If you look over my shoulder, you'll see a very, very nice bottle of bourbon that was given to me by one of my users named Jay. I am really appreciative of that, and it just speaks to the quality of community we have and how much we care about each other. If you're interested in this, I'm going to give you a chance to get my Elliott Wave for Beginners course at a big discount later in the video, so stay tuned for that. For now, let's jump into the chart and take a look. Okay, guys, so here we are on the 2-hour futures chart for the S&P 500. We've been talking about the potential diagonal down and the bear count. It looked like it played out as I talked about in yesterday's video with the big moves down at the end of last week and into today. They moved down just a little bit before this bounce. And so what I talked about in yesterday's video was off of this 4 high. It did look like we were getting very extended down here and looked like we would need at least a B-wave bounce. And this would be considered the A, and then you'd look for this B in the pullback. They came back into that support area we'd look for. And then we look for the bulls to follow through back up toward about 43.15. Now, this level is a little bit lower than you would anticipate for this kind of bounce. You would mostly see it come up more toward the 43.50 area, and that would be acceptable. But if you're looking for an A equals C here, you want it to come down and hit this 40.96 area, and that 43.15 area would be the target then. So the B-wave target for 43.15, we'd look for it to hit in that area. There's a lot of resistance there, as you can see over here. All of this is resistance. And then we would look for them to continue the downtrend toward the 40.96 area to give us the full wave 5 down in that ABC. Now, if you're wondering why it's an ABC and not a 1, 2, 3, 4, 5, the reason would be we're in a diagonal. We've been talking about that for a while. It's why this has been such a challenging market. There have been diagonals all over the place. And what you would be looking at is this is wave 1 down, wave 2 up, wave 3 down that comes down right toward the 1382, which would be the perfect target. Wave 4 comes back up into wave 1 territory, which is invalidating the 1, 2, 3, 4, 5 type count. And then you get wave 5 as an ABC as well, down toward the 40.96 area, as the 1764 is a very common diagonal ending point. So that's why we're in an ABC and not a 1, 2, 3, 4, 5. Keep that in mind. It changes things and makes things very difficult to chart because corrective waves are also ABC waves. And when you have both that are the same, it becomes difficult to kind of figure out exactly what's going on. The big differentiator in Elliott Wave is that impulsive waves are 1, 2, 3, 4, 5, and corrective waves are ABC. I mean, that's what makes diagonals so challenging. When they're all ABCs, you really have to wait for them to play out, and it's why diagonals aren't reliable. If you've been watching this channel for any amount of time, you know that's how I feel. So anyway, that is a quick kind of synopsis of how diagonals work. The overall bull count, they did make a low that held 4,200. They did give us a push up, and it's not an ideal 5-wave count. And that, if it's not an ideal 5-wave count, I'm not going to put a whole lot of stock in it until the bulls truly prove it. But you could potentially have a wave 1 up, a 2, and then you'd look for a 3, 4, 5 back into this high right here for your wave 1. Then you'd look for rejection off of this high. And if you reject off of that high, that would be your wave 2. It has to hold support, and then you'd look for a breakout from there. So again, I don't put a lot of stock into it until the bulls prove it. This move to the upside doesn't really have a great 5-wave structure. It's kind of ugly overall. So anytime I see that, I don't put a lot of credence into that count. But if they are able to give us that 1, 2 and breakout, and then give us a 3, 4, and 5, again, it would likely come up to this 44.20 area and challenge this again. It would likely fail for a wave 2. Wave 1 of 3 would challenge that area again, and so on, and then they'd break out. So that's kind of what you're looking at from the bull count. I'm not really thrilled with what happened, but if they do prove it, then we'll start to look at what the bulls can do. Back over 43.80 would be a very strong sign for the bulls, as it would be over the 764 retrace of this move down, and that would be a very strong indication that the bulls are trying to take back control of the market. So those would be the two counts that we're looking for. If they're going to move directly lower from here, this would just be a wave 4, so you'd have 3, 4, and then 5 down. The bulls could have a chance to hold one more low down here. It's got to hold that 4170 SPX area. They've only got about 12 points to work with below this low, so it's very unlikely they're going to be able to thread the needle here, get just below the low, and then go higher. It's not impossible, but it's pretty unlikely. But mostly what we'd be looking for is this to be a 1, 2, 3, and this would most likely be 4 of 3, and then you'd look for 5 of 3, and then 4 and 5 to get down to that 4096 area more directly. So essentially, yesterday's high is the key. If they break over yesterday's high here, then we're likely in this B wave towards 4315, and then we would resume the downtrend. If they break over yesterday's high and break 4380, then the bulls are looking to take back control. And if they hold yesterday's high and push down, then the bears are trying to make a direct move toward the 4096 area. Over on the NASDAQ, so on the NASDAQ to the downside, we would be looking at a diagonal that is a little different than the ES, where we're looking at 1, 2, and then A of 3, B of 3, and then we'd look for C of 3 to come down into the 13850 area. And if that's going to be the case, we would look for this to be 3 of 3 and then 4 of 3. Then you'd look for 5 of 3 to complete wave 3. And then you'd look for 4 and 5 back down into that area. So if they're going to complete this, they really need to hold yesterday's high, as they did climb up toward the 382 here at 14,836. They can go as high as 14,933, but above 14,933, and things start to get very ugly on the NASDAQ. And we would have to kind of see if the bulls are going to try to take control by continuing to push, or if we're just going to get a sloppier structure overall. So for the bears, they want to hold 14,933 and push back down in wave 5 of 3, then a 4, and then a 5. That would take us down into that 13,850 area overall. And again, back over yesterday's high would be a warning to the bears that they're not going to be able to follow through all the way to this down count. The thing about the NASDAQ is that it still hasn't hit its 1.0. It still hasn't got down to 14,402. Still fairly weak. We have very strong bullish divergence on the MACD for the daily charts on ES and NQ. So it is still to be determined if the bears are going to be able to fully follow through on this move down. But again, a break of that 4170 SPX area, that's what we're looking for to really kind of confirm that the bull count is unlikely and we're moving down in the bear count overall. So there's definitely still some work to be done for the bears, but much less work than the bulls have to do. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible plans that both come with a 7-day free trial, because I want you to get in there. I want you to make sure you love it and become part of the trading team before you ever spend a penny. You can cancel at any time. We also have our Elliott Wave for Beginners online course. Earlier in the video, I told you I was going to give you a coupon code for it. That coupon code is SPOOKY. You can see it on the screen there. It's Halloween season. It's one of my favorite holidays. I want to give that code all the way to the end of the month. So you have it from now until October 31st. The coupon code is SPOOKY. It gets you $30 off of this price. Now, when you enter that code, I want to show you how to do it because it's a little bit tricky and I want to make sure you get it right. So when you go over to the login page and it asks for your information, when you come down here, it will say have a coupon right here. Okay, so you say have a coupon and you type in the word spooky and hit enter. And if you scroll to the top, it'll now say price $37 with coupon spooky. So make sure you type it in and hit enter. And then down at the bottom when it says pay with credit card or PayPal, pick whichever one you want and hit sign up. Then you will put in your credit card or PayPal details. But if you hit this, there's no place to put it in here. You hit sign up and it will take you to the credit card screen. Okay, guys, so coupon code is spooky. You get $30 off the Elliott Wave for Beginners course. Now, this course is helping real people make real money in the market and finally understand it in a way that makes sense. If you're having trouble with the news cycles and not understanding why bad news makes the market go up and good news makes the market go down and how all these things are happening, Elliott Wave makes sense of that by giving you key levels and structures that make sense. It is 25 videos where I go through 3 different parts: the introduction, so your expectations, your mindset and emotion, the KISS method and why it works. It's your chart setup and tools. I give you every tool that you need to use with your chart and how you use it with Elliott Wave to confirm what you're seeing. I also give you our Elliott Wave for Beginners section. That's where I go through each of the waves, go through their failure points, their confirmations, how they're supposed to look, what their targets are, everything you want to know about them, as well as the theory of alternation, the corrective depth theory, the pivot, the corrective zigzag, anything you want to know, it's right here so you can understand the market in a way that makes sense. And the really cool thing, guys, if you don't want to use the coupon code, if you don't want to buy the course outright, I understand, but it is included for free in both monthly memberships. So if you sign up for either room, you get that course for free. In my first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing trade, which means our trades last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are looking for day trading as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that absolutely crushes the market. We get you in at a cheap price and get you big multiples on your money, and it's how he structures the trades that's so unique. Something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where you put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, the key takeaways for today: kind of pivots on yesterday's high. If they can break back over yesterday's high, then we're looking at 43.15 next for this B wave target. If they break over that, 43.80 becomes a must hold for the bears. Otherwise, the bulls look like they're trying to take back control. If they do break down below yesterday's low, we're headed more directly toward that 40.96 target, unless the bulls can thread the needle here and get a tiny little low and then kind of go up from there. But that seems pretty unlikely to me. Over on the NASDAQ, again, yesterday's high becomes very important. They need to hold yesterday's high and continue lower for 5 of 3 to complete all of wave 3. Then we look for a 4 and 5 down into that 13,850 area. However, if they do take out yesterday's high, we would look for an impulsive structure out of the bulls that would take us back up toward this 15.5 area. Guys, that is your market update for today. I will talk to you tomorrow.